Thank you, everyone, for this special edition of Talks at Google as a fireside chat with Mr. Nadeem Hussain. Mr. Nadeem Hussain is one of Asia's leading social impact entrepreneurs, tech investors, and financial inclusion pioneers. He is the founder of Tameer MicroFinance Bank, formerly Tameer MicroFinance, recognized by the World Bank as one of the largest and most socially impactful banks in the field globally. EasyPaisa, offering from the bank, has revolutionized Pakistan's mobile financial services industry. His latest venture, Planet N Group, is Pakistan's foremost technology growth capital and incubator platform, focusing on financial inclusion and facilitation of entrepreneurship in Pakistan through technology. And he has added 24 companies to his portfolio across e-commerce, financial technology, educational technology, mobile television, retail, and renewable energy. Let's welcome our speaker. Mr. Nadeem, you
can call me Nadeem, that's okay.
Nadeem, you had an unusual beginning. After spending nearly 30 years in banking, you came back to Pakistan to start a new venture at the age of 49.
Yeah.
What was easy and what was hard to start something new at that age? And how did you decide to start a microfinance bank back in Pakistan after having lived in different countries?
Sure. So I spent about 27 years with Citigroup in about 8 different countries. And my last assignment was actually out of Dubai, but I was responsible for Iraq doing the sovereign debt restructuring. So of that 27 years, I'd spent half my time in investment, consumer banking, and half my time in risk management. I was 49 years old, and I'd figured of that 27 years, I'd only spent 5 years in Pakistan launching the consumer bank in Pakistan. Otherwise, I'd been outside Pakistan. And I felt it was time for me to go back and do something in Pakistan. Pakistan had been kind to me. I'd got where I had because of my education in Pakistan and subsequently in the US. But there was this tug of saying that I've done enough of Citi. I had become relatively senior in Citibank, making decent money. But I wanted to go back and create something in Pakistan which would be, and I hoped I would be able to change an industry. So I was very ambitious for a person who had only worked 5 years in Pakistan and had actually never done microfinance before. And the reason I wanted to do microfinance was twofold. One was simply capital. If I wanted to own a bank in Pakistan, a commercial bank capital requirement was $100 million. And a microfinance capital requirement was $10 million. So you can see that decision was an easy decision to get into as far as capital requirement was concerned. But there's huge financial exclusion in Pakistan. Of a country right now of 200 million people, less than 6.7 million people have access to formal credit. So my view was that if we could create a microfinance bank which could actually institutionalize this process, create a bank which was run by professionals as opposed to necessarily, but it's not that the other institutions are not run by professionals, but people who had capital market experience, people who had consumer experience, people who had global experience. You would have to learn microfinance because all my knowledge of microfinance was a book written by Dr. Yunus. So I hadn't done microfinance before. So that was a challenge, but I thought that we would be able to create a world-class institution using the 27 years of knowledge I had at Citi and the capital I'd built up at Citi through options. And the funny part is that when I exited Citibank stock was $35. It came down to close to $2 afterwards. So there wasn't, thinking on my part, it was, luck. But right now I was reading the Citicorp stock is back to 2009. It was a big decision in the sense that I'd spent 27 years working for one company, getting a salary in a very comfortable environment. When you're getting a check every month, you're getting a nice bonus every year, you get transported to a new country and the company takes care of you. It's a nice life. And it's not boring because you're moving from country to country, so it's a new market, so you're always getting a different experience. When I was growing up, like most Pakistanis at that stage, my ambition was to become head of a multinational in Pakistan, because it's a great job, you get a lot of perks, make $1 million, and I'd be done. That was my initial ambition, and I'd be a happy camper. I never at that stage thought I'd work for myself or create a company for myself, because that whole mindset at that time was to go find a multinational to work for, and get promoted and become a country head or maybe a regional head. So the first transition was that I would be creating my own company. And my family comes from middle class in Pakistan. My father used to be in the Pakistan Navy and then got into the automotive industry. My mother was a high school principal. There was no examples of any entrepreneurship, in my family. So I was the first person to actually move from a salaried job into, an entrepreneurship kind of thing. So that was the first decision, moving away from the safety net of a nice tax-free job in Dubai, coming back to Pakistan and, putting my own capital at risk. So out of the 10 million, I put in $6 million. IFC put in, $1 million, and there were 2 local investors who put in $3 million to get to the 10 million. The second thing was, I had never worked in Pakistan beyond 5 years. And actually, I was a Pakistani, used to go back every year to Pakistan. Working in Pakistan, especially in the microfinance environment, would be very different. So that was another challenge that I knew I would experience. But I'm an impulsive kind of person. So once the bug bit me that I was going to go back, I actually didn't even wait for my bonus, which that year incidentally would have been $500,000, because we had just finished the sovereign debt restructuring of Pakistan, and Citibank had made close to $120 million on that deal. It was a massive deal. So I was country head Iraq, but I couldn't wait. So I just gave in my resignation, saying I'm going to go back to Pakistan. And my boss said, you hold on for about, it was 4 months away. I said, no, I can't wait. I've got to go back. And I just went back and started Tameer Bank.
Micro enterprises tend to estimate the demand side. Interest rates are typically high for microloans. And recent randomized control trials show that direct cash transfers, that is cash without any strings attached, has more impact on poverty and livelihoods. So how does Telenor Bank ensure that microloans are impactful in upward mobility and breaking out of the poverty cycle for the communities?
I thought this was going to be an easy interview. So there are 2 schools of thought, and both come up with scientific evidence. One says in a controlled group environment, when you do microfinance lending, over a period of time, you actually show improvement. And there's another equal group of people who actually demonstrate that, no, you can't isolate that improvement, whether it's a floor that's been converted from mud to wood, or a bathroom has been put in, or kids are going to school, or there's less people getting sick because of the incremental income that you have, is not necessarily due to the intervention of the microfinance bank, but there could be other sources of income coming in. And because money is fungible, you can't necessarily isolate the impact microfinance lending has had. So both exist, and both are done by very prominent people who've done A/B testing and demonstrated that they are right. In my 11 years, my sense was that I met enough customers that we changed their lives. That the intervention we had done had made them actually better off than they were before. The big risk in microfinance is that over-indebtedness. You get a customer to actually take more money than he or she can repay, and that's when they default. Otherwise, typically the rates of default in microfinance, if you got the right underwriting, are typically under 1%. The big challenge in microfinance is not that your customer is going to default because they haven't given you collateral. It's your business model. How do you take care of the long tail customer? Your business model takes into account that you're going to sell, as opposed to a bag of tea bags, 1 sachet at a time. So you have to build a business model that incorporates that you're selling 1 sachet at a time. And unless you can do that, and that's why large commercial banks are not successful in microfinance, because their business model is very different. It's hundreds of $millions or $10 million or a couple $100,000 of loan at a time. But microfinance is 1 loan acquired at a time for an average of maybe $350 or $300, where the customer has no finances, no credit report of any kind, and you're actually estimating their ability to repay or the debt service by human intervention. And that's the reason that typically microfinance rates are high. It's not because microfinance banks make a lot of money. So if you look at globally what kind of money microfinance banks make or microfinance institutions make, it's not a very high number. Seldom you'll find a microfinance bank making $100 million or $50 million of income. It's rare. I would say, I would count in, about 10 banks globally would do that. The reason the rates are high is the cost of customer acquisition and the cost of underwriting. So if you look at the interest rate, let's say the interest rate is 30%, and you say, well, you're a poor guy and you're lending at 30%, and that's not fair. I mean, you're gouging a customer who's already very poor. So what service are you providing? You're just maximizing your own returns. But if you break and peel that onion of 30%, you find out that out of that 30%, typically 15% is cost of administration. Why? Because there's very few microfinance banks use scorecards for the moment, so everything is human intervention. Tameer Bank had 2,000 people by the time I was exiting, because you need to go and see the customer. You need to figure out, are they able to repay your debt or not? So you have to go a couple of times to figure out what their repayment ability is. Because typically in developing countries at that level, corruption is high, because these people are not used to getting anything done without paying money. So if they need a passport, they need a CNIC card, which is like an identity card, they're always paying some kind of money to touts in between. So typically they're immediately offering money to your relationship manager, and that's something you want to avoid, because you want to have a culture where money is being taken. So you have a separate person going on a verification process where they go and recheck that the customer's estimation of what you're estimating the repayment is correct. Then you have to talk to the neighbor to see if this person has been living in his house for a long time or what time. Then you go to his place of work and talk to his neighbor again. So it's a very laborious, people-intensive process. A commercial bank's cost of administration is typically around 2%, 3%. A microfinance bank's is 15%. Then you have cost of funds. That typically commercial banks have low cost of funds because they have checking accounts or they have savings account. Typically, microfinance banks don't have checking accounts. They can. Tameer Bank had one. But most microfinance banks are dependent on going to the interbank market to raise money. Because the customer's view is, if I have to borrow money, I'll borrow from a microfinance bank. But if I have to deposit money, I'll go to a commercial bank because my money is safe. So that's the kind of paradox. If you're willing to lend to me, you can't be all that, strong as far as your capital adequacy is concerned. So it takes time for microfinance banks to reduce their cost of funds. So typically, you're borrowing 300 basis points over the money market rate. So let's say if the money market rate in Pakistan is 6%, typical microfinance will borrow at 9 to 10%. So 15 plus 10%, you're at 25%. Let's say default is 1%, so you're at 26%. And if your margin of 1 or 2%, you're at 28%. So the rates are high, but that's the reason the rates are high. If microfinance banks start embracing technology, you can bring that administration count down. If every time you're approving secondary using scorecards or artificial intelligence to create algorithms which can forecast, what your default rate is going to be, you can bring some of that administration cost down. If you create, checking account or mobile account programs, you can bring your cost of funding down. So in Tameer, my ambition was to bring our lending rate was 28%, to bring it down to 15%. And credit card rates in Pakistan are 32%. So, hopefully the new management is looking towards that. But that's the reason, microfinance rates range from 30% to 40%. But they don't make that much money. It's because of the way this whole business model is.
So Telenor Bank has created and instituted a successful mobile payment system called EasyPaisa. And many have tried to introduce mobile money in Asia, but there have been very few successes. How did Tameer go about creating a new infrastructure and network to enable mobile money? What are the challenges you faced and how did you overcome them?
So the biggest challenge in creating a mobile distribution network is behavioral change. Now you've got to realize that the poor are willing to pay for services. They don't want charity. And their view of value for money is much, much more acute than yours and mine. So, we spend some extra money, but they have a finite budget and they have to work within that. And they're willing to pay for value if you create value. They're never going to pay for more than, but it's a behavior change requirement. So when we looked at Pakistan, and we said, listen, this financial exclusion that we have is not limited to credit, it's also limited to savings. Since 1947, when Pakistan was created, it's going to be 70 years, this month. The entire commercial banking industry is only opened close to 32 million bank accounts. And if I take unique bank accounts, you're probably talking about 15 million. And the savings to GDP ratio in Pakistan is under 6%. So we said there ought to be a solution for savings as well. And savings can get generated when you start payments. So how do we create a payments culture? Pakistan is a cash society. And there's about 3.3 trillion rupees of money floating in the system because everybody plays cash. In a country of 200 million people, unfortunately, registered taxpayers are about 1.2 million. The bulk of the taxes are collected on an indirect basis. So, people don't have bank accounts, they don't want to keep money, but they use money all the time, cash. And cash is expensive. It depreciates in terms of its physical form, you need to carry it, it can get stolen. So if you can do digital payments, in many ways you're better off. So we said, okay, we want to get into the branchless banking business. And again, the idea of EasyPaisa didn't just come to me, and I went to Kenya to look at M-Pesa, I went to Philippines to look at GCash, and I looked at various applications and said, and obviously Telenor was a partner at that time, so they had some insights as well. And we said the easiest way to get people to start using branchless banking is payment of utility bills. Now you guys typically pay through your phone maybe, but in Pakistan, every month other than the telco payments, 30 million utility bills are created for power, gas, water. And people typically go to a bank, get in line, during banking hours, give up their work time to make that payment. And banks hate these people because they congest their lobbies. So can you imagine, they're not bank customers, they're just coming to pay utility bills, and they're standing at the teller while the bank customer's on the side. So the bank make it as difficult as possible for these guys to pay. But that was the only venue. And we said, okay, if we can create a mechanism where we just start accepting utility bills and make it easier compared to what they're doing right now, we can start a behavior change. 12,700 banks in Pakistan, 9,000 ATMs, but people never use ATMs for repayment of bills, although you can. 95% is used just for cash withdrawals. That's the typical psyche. You can even make a interbank payment through an ATM, but people don't. They just use it for cash withdrawal. That's the cycle globally. So we said, Pakistan has now, let's say, 90 million unique SIMs, people with phones, 120 million SIM cards outstanding, and 99% of those are prepaid. So it's not like postpaid accounts over here. Most people actually buy scratch cards or do a top-up very frequently, in the month whenever they run out of SIM balance. In order to accommodate that, the telcos had to set up a vast agent network where people could go and buy SIM cards, just like India, just like Bangladesh and most developing countries. So the telcos had set up an agent network, multiple of what the bank branch network was. So the vision was, if you can change that agent network into providing basic banking service, like opening an account, closing an account, making a utility bill, making a transfer, then you would actually create an alternative network, which would be far more convenient for the target market we were looking at, because this network is in the neighborhood. It's open 7 days a week. It's open probably 14 hours a day. The owner doesn't go to play golf, so it's something that's service-oriented, because these agents are selling a whole bunch of other stuff other than just airtime. So we basically started onboarding telco agents for accepting utility bill payments. Now that was a behavior change. When these customers go to a bank, they see a bank branch, they see the board of the bank, and they're comfortable that my payment when I make it is going to go through the utility company and my power won't be cut off. So we're telling them, hey guys, go to the small shop, the mom and pop store in your neighborhood, and pay your utility bill and you're going to be okay. And the guy says, hell no. if I go and make this payment and this guy shuts down tomorrow and my power gets cut off, where's my redress? Who do I go to? So we tried to overcome that by issuing a receipt by Telenor Bank. So we said, listen, Telenor Bank is a central bank regulated entity. If your power gets cut off, you can take the bank, go to the central bank, and the central bank will make you whole. And the second policy we had was because the average payment was very small. I mean, the average utility bill payment for the common man was under 2,000 rupees. So our policy was never dispute. Just make that payment. So that power never gets cut off. Even if you think the customer is in the wrong, just make that payment. Get that confidence level up so this behavioral change takes place. So people start paying the utility bills at the local mom and pop store as opposed to a bank. And that was, the behavior change we wanted. We ran a lot of campaigns. We tried to, had brand ambassadors standing at these mom and pop stores saying, pay your utility bill. It's instantaneous. Here's a receipt. And, our own policy was no dispute, just pay. And, at the time I left, Tameer Bank was doing 10% of the 30 million bill paid. So 3 million bills were being paid through us. And that customer confidence of actually going to a mom and pop store and doing a banking transaction started. So that was the initial step. The second step we said, it was, if you're in a startup, you make great plans, and when you go to the ground, you sometimes find out that those plans are in the waste paper basket because you called it wrong, but you have to figure out a way to pivot. So we thought our biggest product was going to be international remittance. Pakistan gets $17 billion a year from workers in the Middle East, in the UK, and in the US. And we said, bank branches, 12,700 closed on a Sunday, half day on Saturday, closed long period on Friday for prayers. We would be able to use our agents across Pakistan, 60,000 agents, and be able to do this payment out. And then therefore the large payment providers would flock to come to us because we would have such great distribution. Well, the only thing we miscalculated was the average remittance size is $40,000, 40,000 rupees. And the small agent doesn't have liquidity to pay out 5 of these payments in a day. And all you need is, if our Pakistanis go to ATM and it's not working, they'll say, no problem. But if you go to withdraw cash from a branchless banking agent and there's no cash, they say, oh, these guys are fraud. And that whole confidence level you've built up changes. So our international remittance product failed. But in that whole learning process, we understood that there's a huge component of domestic remittance. $15 billion are paid domestically in Pakistan. And is gone through, the way the money is transferred is through something called Hawala, Hundi, which is informal payments through, money agents, or through the post office, or, people going to your hometown and you just give them the cash so they give it to, your family back home. And we said, let's try domestic remittance. And domestic remittance was a phenomenal success. And as I said, in our original plan, there was no domestic remittance as a product. But that's whenever you start pivoting to when your original plan fails. And that's what actually was the biggest behavior change in the industry we created. That instead of going through informal channels, you could go to an EasyPaisa agent and say, I want to transfer money. And he would say, who do you want to transfer to? And in Pakistan, there's a universal identifier called a computerized national identity card. So it's a 16-digit number everybody has. You just can't live without it. You won't be able to do anything. So if I was transferring money to you, I would show them my CNIC card. I would give them your CNIC card number. If you had a cell phone, I'll give you a cell phone number. I'd give my cell phone number. And then the agent would hand over his feature phone, because remember, you're working on SMS at that time. Smartphones hadn't come in. And he would ask you to put in a PIN number, 6-digit. Now, incidentally, 90% of those PIN numbers were 1, 2, 3, 4, 5, 6. Okay? But I'll tell you how we overcame that, okay? And within 3 minutes, that money was available at 60,000 agents. And the beneficiary would go to the agent and say, I have the money come in. He would say, okay, show me your CNIC. And they would physically show the CNIC and say, okay. The agent would give him their phone and say, put in your PIN. Miraculously, 1, 2, 3, 4, 5, 6 would be done. And the money would be withdrawn. So it was a huge change from waiting for the post office or informal services. And it was phenomenally successful. So we got to the second stage, of what was getting people now to get to a comfort level after utility bills to start making domestic remittances. The problem was that we went to the agent said, I'm not going to do this. I make 100% margin on the things I sell. This thing takes time. You want me to add, at least 40 characters by the time I'm done with the transfer. So I'm going to add the CNIC number for myself, CNIC number for you, which is 16, there's 32 digits. I'm going to add a 16-digit PIN, 38 digits. It's going to take time. So they extracted the pound of flesh. Then for every dollar we made, they took 70 cents. That's the price we paid for getting the agent network to absorb or accept branchless banking, which means 30 cents were left, which we split between the telco, Telenor, and Tameer Bank. So we had to then look at doing huge volumes to be able to make money. But the agents were very happy because initially they were reluctant, but then they started signing up. But the end state was mobile wallets, because we are still not into branchless banking because we've got physical interaction. You have to go to an agent. It's like when I talk to, I see an ad in the paper which says, XYZ Bank has opened a digital branch. You can walk into the branch and there's no human intervention. And I say to myself, why in the hell would I want to get in my car and travel for 5 miles and then go into a branch and say, wow, digital branch. This is the smartphone is my digital branch. I should be able to transact everything sitting in my bed watching, season 3 of Game of Thrones and, the latest episode and doing my transactions. So, it's just mind-boggling for me, this digital branch concept, no human intervention. Maybe it's, busy street next to your office, but why would I even want to walk anyway to do my transactions? So our next target was creating mobile wallets. That if we could create mobile wallets instead of just physical activity, and if the customer was able to populate the mobile wallet, then, person-to-person transactions, utility bill payments, person-to-business transactions, G2P, government-to-person transactions would take place. And this 3.3 trillion rupees floating in the system would start coming into the banking system. And we would have a secondary revenue stream where we would have some float on these mobile wallets versus the transaction fee. So initially, we had a hurdle of how to open these bank accounts, because the central bank required a physical face-to-face to open a bank account for KYC and anti-money laundering purposes, that to know your customer, you've got to see them. Now, that's a difficult call. That means either the customer would have to go to my branch and my network of agents would not be able to open, or they would have to take a photograph of the customer, photograph of the CNIC, which meant that the feature phone wouldn't work because the pixel quality was too poor, and the agent would have to have a smartphone, and who would fund that smartphone? So our advantage of having a large network kind of got, under leveraged as a consequence of this requirement. But sometimes things happen in the industry which don't happen because of you, but you get to benefit from. So the Ministry of Interior decided that every person who had a cell phone had to be biometrically verified, because there were a lot of activities taking place, sometimes kidnapping, sometimes terrorist activity from cell phones they couldn't identify. So if I gave my identity card at the time of making a transaction to a branchless banking agent, that branchless banking agent could take my CNIC card and have 5 more SIMs issued, which I didn't know about. So the Pakistan Telecom Authority first came up with a way that if you put in your CNIC card number, you'd find out how many SIMs have been issued in your names. And I did mine, I had 15 SIMs. And I knew that only 3 of those were mine, and the rest were, people using my identity for creating a SIM card, account with a telco. They were paying them on time, but wasn't my SIM. And if tomorrow something happened, the agencies or I would be responsible. So first, this whole purge took place of multiple SIMs went away. But they still said this is not working, so they said every SIM has to be biometrically verified. So if you hold a phone, you would have to go into an agent and be biometrically verified, which would be verified by the national identity base we have, which is called NADRA, and then your SIM would become active. And if you wanted a SIM, immediately you couldn't get one. You'd have to get biometric verification. You'd have to get an official address, and it'd be delivered to your home. That took away like 35 million SIMs from the telephone market. over a period of time the SIM took place. But then we had a very strong case, and we went to the central bank and said, hey, this SIM is biometrically verified by the central database. Why am I required to see a customer? Let's create bank accounts in line with transactions and know your customer risk. So let's say we have something called a level 0 account. This level 0 account says you can do 50,000 rupees. 50,000 rupees is $50 of transactions in a month. That's good for 90% of Pakistanis given the per capita income we have. Central bank allowed us and the industry to do a remote account opening. So all you have to do is send an SMS to 4 of the banks which are connected with telcos, and you can open a mobile account. So the first thing that came about was the 1-minute account, which actually doesn't exist in many countries, including here. You have to physically go into a bank to open an account. In Pakistan, you can open a level 0 account remotely under 1 minute. So this hurdle of opening a mobile account went away with this new regulation. And right now, there are 27 million mobile accounts in Pakistan over a 3-year period, as opposed to the 32 million bank accounts since 1947. So branchless banking or technology can actually make huge impact, when used properly, and it can change behavior of people. So obviously, nothing is easy. So we have 27 million or 23 million mobile accounts. But the next question you would ask me is, that's great, sir, but how many are active? Because opening an account is easy, because I run a sales campaign where the agent gets paid for every mobile account, and he has his grandmother and his dog opening an account, just because he wants to get to that target, we're going to pay him for opening a mobile account. But less than 25% are active. And active is generously defined as 1 transaction in 30 days. That's the GSMA definition of a mobile account being active. So we have yet to create the ecosystem to have the customer leave money in their mobile account so that this becomes a source of revenue for the branchless banking players. Because until you get to a stage where I'm going to get into a tangent. I was giving a speech about, what I call digital Pakistan. And I said 3 things need to happen. And if we do that, we'll get exponential growth. The first was the 1-minute account, and that's actually taken place. The second was the 6 orange purchase. I should be able to buy 6 oranges with digital cash as opposed to cash. So if I'm even going in Pakistan, you have a lot of hawkers, people with the small trays. If I'm doing a $1 purchase, instead of paying him cash, I should be able to pay with digital cash. And that acceptance hasn't taken place, that merchant acquisition hasn't taken place as yet. And when it does, suddenly you'll see a very high level of activity in mobile accounts. And the third thing was, the 5-click onboarding, that, if you're sitting in a village and you want to become an e-commerce merchant, you should be able to, in 5 clicks, be able to set up the photograph of your product, set up your payment mechanism, set up your logistic mechanism, and the 5th click, you should become a merchant. Obviously, that needs 3G and 4G coverage, which is happening in Pakistan. So those things, when you have those kind of things happening, suddenly you see digital transactions taking place. So that was the challenge, and I think we're halfway there. So we've got the mobile accounts open, now we have to make them active.
As a startup investor, what is your view on the current technology and entrepreneurial scene in Pakistan?
So Pakistan, remember, is a country of 200 million people. That's a lot of European companies combined, and you won't get to 200 million people. But a lot of, the lens you see Pakistan from here is, there's blood in the street, there's bomb blast, there's, or the prime minister's been removed for corruption. So negative news carries easily. And I've been here, 2 days, and I've met about, I think, 12 people already, a lot of them VCs, just talking about what's happening in Pakistan, because there's a counter narrative to what's run by CNN and Fox. A lot of positive things happening. So what's happened in the last 6-7 years in Pakistan is the emerging middle class, for example. There are 30 million people in the emerging middle class with purchasing power. Because the inflation rate has been around 4.5%, salaries and growth rate, company growth rate has been around 8 to 10%. So people have been getting incremental income, and now you have 30 million people in one country which have purchasing power. Right now, there are 45 million smartphones in Pakistan. which is expected to go up to 80 million by 2020. So remember, the smartphone is, calling, and you guys know this better than me, calling is just 1% of a feature of a smartphone. It's the biggest invention I see that's happened in our lifetime, and it's going to revolutionize many things. If you have a smartphone, I can do e-health with you, I can do e-education with you, I can do e-entertainment with you, I can do e-financial services with you, and I'll talk about some of these initiatives we have. Basically, the world changes when you have a smartphone. By 2020, Pakistan is going to get 90% GSMS coverage, 3G and 4G, all over Pakistan. So suddenly, rural Pakistan gets connected with urban Pakistan. And with purchasing power increasing, you've got a whole bunch of people who can now, it works both ways. They can buy things which they previously didn't have access to, or I have access to them. I can run a remote education program. I can do e-health consultations at clinics where a doctor is present in Karachi, but I'm in a remotest part of Pakistan, and I can do diagnostics. And then I can use e-payments to pay the fee immediately happening, and I can use my e-pharmacy to send the medicines out to those people. So Pakistan is now getting connected. And this is what I'm talking to the VCs over here, that here's a country which is starved for seed capital. There are 2 PE firms and 3 VCs in Pakistan. I'm the largest angel investor in Pakistan, and I'm far from a high net worth as far as Pakistan's rich families are concerned, which are sitting on $500 million of cash liquidity, $500 million, okay? And if I'm the largest angel investor, it's a travesty, because these guys, can invest a lot more. But I view this as a major opportunity, because I think Pakistan's grossly undervalued. With all these things I'm talking about, this big consumer wave is going to take place, and the valuations over a period of time go up. The VCs in Pakistan, outside Pakistan, are going to recognize Pakistan as a country where they ought to come and invest once they get over the Pakistan risk hurdle, okay? And then, what valuations we have now are going to exponentially increase. And people who invest now are going to be able to ride that benefit. They're taking the initial risk, and people will get rewarded for being in Pakistan at the right time.
We have a live stream question. Question is that whether the regulatory environment in Pakistan poses a huge challenge to the startups, and what is changing, and what can the startups do to not fall into that?
So, there's good news and bad news. The good news, for example, if people are starting a microfinance institution, Pakistan's regulatory environment is recognized by the Economic Intelligence Unit as number 3 in the world. So that's very sorted out. But if you're not in a microfinance world, then it's a challenge, because the laws are geared for the old economy. They're not geared for the new economy. So if you look at neighboring India, they have Startup India, where they've taken 5 or 6 different things and said, we've got to change these laws if we're going to make an entrepreneurial culture happen in India. Pakistan's recognized those things. For example, if I want to register my company, I ought to be able to do it online and pay industry, and there should be a separate window. So that window exists, but it's not very effective right now. If I'm investing, I should be able to do a down round, which Pakistan law doesn't currently allow. I should be able to give employee options, which Pakistan law doesn't currently recognize this. So we've identified all the issues, working with the Securities and Exchange Commission, working with the tax regime, now to provide shelter for both investor and investees, because you're going to have a lot of, startups that fail. And you want to make that investor actually, some protection for all that money that gets written off initially. So we're getting there, we're not there yet. But it's recognized by the government now that Pakistan has the largest youth cohort in the world. 75% of people are under 35, 50% of people are under 25. As these young people graduate, there's no way our current economy can absorb them through regular employment. So there has to be entrepreneurship. In order to make that entrepreneurship, it can be a dividend or it can be a bomb. Because if you don't have employment for the youth coming out, then they'll get into what I call reverse ATMs. So when you stop at a traffic light, they say, can I have your phone, can I have your wallet, can I have anything else that works with? So they'll be withdrawing from you non-voluntarily, okay? Because you got to give them employment. There has to be means for them to sustain themselves. So that's why the government and the private sector, and that's why I have so much passion for entrepreneurship, because I think that's the future. Because Pakistan is such a young population, and I work with young people, and they have far more brilliant ideas I can even think of. And they need a environment where people can believe in them, mentor them, help them grow, and provide capital. But I'm just one person, so we need to have a whole slew of people and support system from the government that makes this a much bigger play on a grander scale. And we're getting there, but we're not there yet.
So a follow-up question on that note. What role are the tech incubators playing? And if you can name a few which are playing active role in this.
So there are 34 incubators, accelerators in Pakistan. And I would say probably 3 years ago, there were 5. So there's a mushrooming and understanding that incubators and accelerators can play a role. There's Plan X, Plan 9, Nest.io, My Incubator, 10XC, universities have, incubators as well. But the view, right, it's good news and bad news again. The good news is that, entrepreneurs who want to go into an accelerator, incubator program now are able to get mentorships. They are able to get co-working space. The bad news is there's only one accelerator that actually pays you, or values you and gives you money. And once you graduate, there are not enough seed funds available over there, VCs, that when you're graduating and your initial capital is burned up, to give you money. So the risk we run sometimes is that you're going to have default rates far higher than the natural 95% default rate, because there's not enough capital once you graduate. And that's one of the things that I'm spending at least the bulk of my time on, is getting people so that seed funds and VCs are there, so when people graduate and have a great idea, they don't die because of lack of capital. They ought to die because it's an idea that can't be scaled, not because there's no capital and great ideas just, finish off.
We have time for maybe one last question.
Do you have any questions from the audience?
Mesmerized.
How long do you think?
There you go.
How long do you think it would take for behaviors to change as far as actually using digital wallets and digital transactions on the 6 Orange thing that you were talking about?
So one of the constraints of the 6, or if you know the banking business, then there's something called merchant acquiring. That if you use your credit card or a debit card at a merchant, there's a point of sale machine, POS machine, where he or she swipes your card, and the payment gets made. It takes money from your credit card and pays it to the supplier. So the constraint in Pakistan was that POS machine costs about let's say $30, $35. And if I want to go to a real small shop, his or her inventory is not equal to the $30 risk I'm taking. Or if I want to build 100,000 merchants, I need $30 million of capital to put 100,000 machines in place. But technology is a way of changing things, and now you have QR codes. So a QR code now at a merchant can be put in where a POS machine is no longer required, and if the customer has a smartphone, he just puts his QR code and a payment can be made. But the challenge that's still remaining is that why would typically the way that a bank makes money is that there's something called a merchant discount rate, MDR. So if you sign up a merchant, the merchant is going to pay you 1.5%, 1%, depending on where you are in the world, as fees for the facilitation that you're doing for increasing his sales, because other than cash, a person can come in and use a credit card or a debit card. But a mom and pop store or a hawker is not going to give you 1%. He says, thank you very much, I like cash. First you're asking me not to take cash, then you want to charge me, for not taking cash, doesn't work for me. So this business model needs to be worked out, that if you create these merchants, that you make money from float, as opposed to transaction fee. And the Pakistani market is not there yet. So while QR code has been established and people are experimenting, like Finjal, with QR codes or HBL or the MasterCard, the real inflection point has come when they figure out the business model.
Do you think that's a major bottleneck right now?
Yeah, but I think we're about probably a year to 18 months away before that gets cracked. I'm going to take a shot at it as well, so let's see. Great.
All right, so we have one final question, maybe a minute and a half for that. pretty broad one. What can companies like Google and other Bay Area companies do in your opinion, in the emerging markets?
I think, one of the things, Google or large players can do, very honestly, broad response, believe in Pakistan, believe in the talent that exists, and use some of the, CSR and non-CSR money in supporting, and some of it that's already being done. So 10xC, my accelerator, has a special deal for, data, crowdfunding from Google for startups. But there's going to be a lot more of that. Take some investment dollars, put it in the infrastructure in Pakistan. Because this is, like I said, a 200 million people country with a large youth cohort, which will become Google customers for life. So there's a lot more investment that needs to take place, and a lot more understanding and appreciation of what the local dynamics are, not just for Google, but for other people in the Bay Area who want to access a country of 200 million people.
Let's thank our speaker.
Thank you.